Good morning, guys. We got Charlie Cassel and Samir Maskey here. We're interviewing about the CSLM Acquisition Corp. Charlie Cassel there is from CSLM, and then Fusemachines. Samir, founder and CEO of Fusemachines. Good morning, guys. How you doing?
Good morning.
Samir, you're on mute, actually. Let's get that taken care of.
Perfect.
All right. Awesome. Happy you guys are here. So looks like there could be an interesting situation here. We'll see. I'm going to start mostly with questions for Charlie, just to understand the structure and the timing and everything of this SPAC. The first thing I notice is you got like three ticker symbols, CSLMF, which appear to be the common shares, CSLRF, which is the rights, and CSLWF, which are the warrants. And my first question, I don't know if you can answer me right off the bat, is usually in these SPAC deals, prior to the deal closing, you're like sitting there at like near the redemption price of, I don't know what it is in your case, like $10, $10.50, whatever it is. And here it's like $2.60. It's gone down like $7 on 1,000 shares of volume in 4 days or something.
Right.
What's going on there? Can you explain this to us?
Yeah, so the deal's already been approved at the EGM. The redemptions have passed. They've already been processed.
So that happened like 3 days ago, I guess?
That happened on the 28th of July.
Okay. I see.
So you've had the rights, which have been trading like not very well, that have been stuck around 25 cents or so. And I think you've seen a broad conversion of the bid towards the rights prices, but the offer is, last I looked at it, was $3 or $4 higher. So, and like you pointed out, it's on 1,000 shares. And I think the other day, one share traded. So, I think it's not irrational, but it's also not meaningful.
So the rights give you access to what? If you have one right, that means what?
It's a 10-to-1 conversion. So you need 10 rights to convert to one share at closing.
Interesting. Okay.
So those are the ones that I think are still not pricing in the lack of deal risk at this stage.
Okay.
You've got a lot of companies, little Chinese companies that have no deal in place that are trading at 25 cents. So it's or Chinese sponsors, I should say. So I don't think it's really a reflection of what the quality of the transaction is. I think it's just the fact that this is a very tight deal that we are completely funding. There's no outside capital that's going to be coming into it, and nobody really knows the story yet. So I think that's where the opportunity is.
Okay, but you said the merger vote already happened. The redemption period is already passed. So when does the ticker symbol change to Fuse?
So we're going through the NASDAQ uplift application right at the moment. So we're anticipating, and there's no guarantee of this, it's all up to NASDAQ and how quickly this gets processed. But we're anticipating it's in about 2 weeks. 2
weeks, okay. Is there a reason for that delay? I notice you have an F hanging on here at the end of the ticker symbol. Like, because usually I see these ticker symbols change like a day or two after the vote. Why is this taking longer?
So we got the fund, or the SPAC, went down to OTC back in January when it hit its three-year period. So we've been working on getting all the financials cleaned up and the S4s cleaned up and SEC approval for the last few months, and it's been trading on the OTC since then. So really, that's a reflection of what it's been since January. And when it gets uplifted back to NASDAQ in a few weeks, that's when it'll go back to having a new ticker with Fuse.
I got it. Okay, so in a few weeks, we'll drop the F and it'll just be FUSE,
yep.
Right? And then these warrants will give you, the rights. So, according to, so 10 of them give you one share, right?
Right, correct.
Could be a very interesting situation. Let's find out a little bit more. So before I get to Samir, so what can you tell us about after the redemption period, like what the shares outstanding and the cash balance is now for the company, for Fuse? What are they going to have in terms of outstanding shares and cash balance?
That was the question to me or Charlie?
Oh, I was asking Charlie, but Ms. Samir, I guess either of you can answer that one.
I'm sorry. Yeah, okay, so I can answer that question. There'll be approximately 26 million shares outstanding after the transaction happens. There'll be 20 million rollover shares that put into the go into the company or the previous shareholders of the company. You'll end up with about 4.7, something like that, on that were related to the sponsor, and 1.9 million rights.
Sorry, I didn't. So what's that translate into for total outstanding? I'm just trying to calculate what the valuation is at here at $2.
Yeah, it'll be about 26.5 million shares total.
26.5 million total. All right, and I missed the cash balance again.
Pro forma, he should end up with a cash balance of about $8 million, something like that.
8 million. Okay, so then we're talking about at 256. If he can get it at 256, maybe it won't be able to. I don't know with that spread. That's why I understand now why you're talking about the rights offer maybe a better situation. So 26 million, you're about 67 million valuation, 8 million cash. Got it. All right. So that's the situation. We're talking about Fuse, going to be Fuse in a couple of weeks, coming in at a 67 million valuation, which you can actually get via the rights. It's hard to get. You can't get it through the common shares. Now I get it. But if you buy those rights at 25 cents, you're basically buying Fuse at a 67 million valuation. I got that whole story. Everything's approved. Just waiting for NASDAQ 2 weeks from now, and you're trading under Fuse. Anything I missed there from a structural point of view, Charlie?
I don't think so. I think it's just probably important to note that this transaction is being funded pretty much internally by my firm, not pretty much, entirely by my firm. So we haven't gone to outside capital. So you don't really have what I would describe as a third-party benchmark on valuation at this stage, other than what the market is reflecting. And I don't think the market is reflecting anything that's really anything other than technical at this point.
Okay. And actually, before I go to Samir, you just mentioned valuation. I would love your perspective on valuation, like why, how you came to this, the 200 million implied equity value when the deal was made, and now it's 67 million. What you think of that? Is that the right price at this point, or was it 200 million? So talk to me about valuation, how you arrived at these numbers, and what you think it should be valued at. I'm sorry, Samir. I'll get to you. I promise, Samir. Okay, go ahead, Charlie.
Sure. I think some of this I got to be slightly careful of on MNPI, but effectively, we are professional fund managers. We're a boutique investment management shop that runs institutional money for long only equity in emerging markets. And Samir is a U.S. company, but has some origin in Nepal. So that's why it generally fits for our funds. We went into this wanting to disintermediate the IPO market in some of the stock markets that we operate in the sense that in the Blackstones of the world, the big investment managers get the IPO allocations, and even though we're dedicated, we've been kind of lost in the woods sometimes. So we thought we had a chance of being early and helping guide a company through the capital markets process. And Samir's company is effectively, in our opinion, a bet on the founder, the growth potential, and the market itself from a macro standpoint for AI products and services. So it's a small company. It's microcaps always end up with pricey forward-looking PE ratios. But we think that he's going to grow into his valuation very quickly once this deal is finished. The opportunity set is enormous for AI right now. You've got a macro tailwind that the big beautiful bill has created an environment where you've got some better predefined rules in the AI space. Samir's company does not is not in the generative LLM AI space, which is eating up gobs of capital. He can turn this on very quickly now that he's got a public listing or on the verge of getting a public listing, and he's got fantastic growth potential. And so we saw it as an opportunity to get in at a very cheap level. As a sponsor, we put committed capital in place for him since we signed the deal. And our view of valuation is that you've got a multiple on the upside, and we put a $200 million valuation on there. Is that what it's worth today? I think the market can be the judge of that, but I think the opportunity for him to grow well in excess of that in the next couple of years is solidly in place, and the foundations are there.
Okay, great. Thank you, Charlie, for that. And stick around when I come back to you. Let's head on over to Samir Maskey, founder and CEO of. A disclaimer: as all of our interviews with CEOs, it is a paid sponsor position, and I do not currently have any of these shares, and I don't limit myself to not being able to trade. I've interviewed a lot of CEOs, and I often own the stock, and sometimes I'll buy it even during the interview. All right, so we'll see. If I do that, I'll make sure to make that disclaimer. All right, Samir, let me just, I have a little, before you start, just to set you up. It says Fusemachines builds enterprise AI software and services, including AI studio tools, engines, and implementation services aimed at automating workflows and augmenting decision-making for large corporate clients. They operate a products and solutions model rather than pure AI staffing, with offerings designed for faster adoption and scaling. Okay, now what I want to talk about before we get into your product and why you think you might succeed there, I want to hear about you, Samir. Tell us when you started this company, just how it started, why you started it, where you're located, kind of like the logistics in the background before we get into anything about the product. I just want to hear the logistical information about the company right now.
Sure. So I started the company in 2013, in the beginning of 2013. And by then, when I started, I already had been in the AI space for, not like 12 years or so. So wow. I've been doing AI for almost 25 years. I built first Nepali to English speech-to-speech translation system in 2000 when I was undergrad, built Nepali speech synthesizers, released as open source. Been doing AI for many, many years. And, the world had changed before. When we go to AI conferences, it was just PhDs and researchers like us, but now it has become different. So a lot of background on AI, and after getting a PhD at Columbia University in AI, went and worked at IBM Watson, where I was part of the research staff. Then left all that and started.
Hey, did you work on any Weather Channel stuff over there?
No,
that's where I've seen Watson. That's whether you open the weather app, it says powered by IBM Watson. That's all I know.
There I was working on deep question answering systems and speech-to-speech translation systems. And then left all that to start Fusemachines, and also started teaching at Columbia various courses such as deep learning, generative AI, and so forth. And in the beginning of 2013, when I started, it was the view that there's a lot of research that's done in AI, and many of it has been sitting in the labs. I had a deep expertise in AI, particularly in natural language processing. So based on all the learnings I've had, what can I take it to the market and build a product based on the skills I have? And that's how the company got started. And our first product line was a customer service automation platform that we launched for customer service.
And where are you located?
So we're located in New York.
Really? New York? Where in New York?
So we are near Penn Station.
Are you kidding? Wow. I'm from New York. I used to live right near Penn Station for a while.
Oh, okay.
It was crazy. 43rd and 9th, right by the Lincoln Tunnel entrance.
Okay. Yeah, we are right now on 30th Street.
Where are you?
We are on 30th Street.
30th
yes.
Street. Okay. And is that where you've been since 2013?
No. Obviously, in the very beginning, it was when I founded the company, there was no other employees, right? So,
Okay.
Unlike and in Manhattan, there are no garages, so it's in the apartment. So that's how it got started. And then as I hired people, we rented an office, and we've moved around the office quite a bit from Midtown to Soho area and so forth.
But it's always been in Manhattan.
It's always been in Manhattan.
Okay. And how many employees do you have now?
So in total, we globally, so we are headquartered in New York. We have a big presence in Nepal. So I grew up in Nepal and came here in college and scholarship.
Okay.
So we have a connection with Nepal where I grew up, and we have a big presence in Nepal with about 300 employees there or so.
You have 300 employees in Nepal?
Yes, we do. We do.
Wow.
A lot of them AI engineers. So basically, one of the big assets we have, what I would like to say is, right now with all the talent in WAR, we've had almost a secret sauce of running AI fellowship programs in underserved communities like Nepal, Latin America, where we have trained up a lot of AI engineers to whom we provide almost a 1 year of training and get them ready for being able to implement extremely complex AI systems. So we have a big presence in Nepal with 200 plus engineers. We have engineers in Latin America as well, 50 plus engineers.
What kind of staff do you have in Manhattan?
About 30 or so in North America. Yeah.
So it's a pretty nice sized little company here. How have you been funding all this since Charlie came in your life? In fact, you don't get his money yet, right? Do you get the money? When do you get his money? Did you get the money?
Charlie, you can go. Yeah.
He's gotten some of it. He'll get a big chunk at closing again.
Okay, great. So how have you? Well, didn't the deal close? We're just waiting for the uplisting, or no? There's still a close.
It technically will close when the uplift happens. I mean, that's when the deal actually happens. But it's been approved. All the shareholder votes.
I got it. It's just being delayed because you got to uplist to NASDAQ until it's got it. Okay,
exactly.
So how have you been funding this? You've been doing, 12 years in business, 330 employees. It sounds like maybe more, I don't know, but between New York and Nepal at least. So how are you funding this until now?
So in the very beginning, we had some angel investors right in 2013. Then we did a seed round, and then we did a couple of seed rounds with venture capital firms and private equity funds. We've always been extremely capital efficient, where the growth has been fueling the further growth, where the revenue has been fueling the growth. So, we've raised a bunch of rounds over the last 10 years, but not a lot.
Okay, and what's when did he start recognizing revenue? You started in 2013. How long did it take till you got your first dollars in?
The first dollar was in 2013 itself. Our first deployment. Wow. The customer service automation was with New York City government right off the bat. But coming from academia and, as being a first-time founder, I had to learn how hard enterprise sales is. And now I have. And over the last 4 or 5 years, that's when most of the growth happened, with a very strong trajectory for growth, which I believe is going to go further. The growth rate will get even higher with all the capital that Charlie is about to provide to us.
And what can you tell me about the revenue growth rate? What are you at now? What's the most recently reported revenue number?
So 2024 was $8.8 million of recognized revenue, which was about 18% growth from 2023. And over the last couple of years, especially, we have spent a significant amount of resources and money on trying to improve the product, which is the AI Studio, which allows us to build industry-specific, problem-specific solutions.
Sorry, I'm taking notes because it's very interesting to me. But in 2020, you said the growth rate over 2023 was how much?
18%.
18%. Okay, got it. Sorry. Go on.
And that's without a lot of capital to use on sales and marketing, right? We haven't had a lot of capital on sales to spend on sales and marketing yet. Plus, we were also improving the product line, particularly AI Studio and AI engines over the last 2-3 years. Now we're at this inflection point where we have a product market fit. The product has matured enough where some of the enterprises are looking to buy more than one engine, and the capital is about to come in. So with that combination of fuel with the product maturity, we expect a lot higher growth than 18% growth.
Okay. And have you reported anything in 2025? Any quarterly reports since that 8.8 million in 2024 that you talked about?
Yeah, we reported a Q1 numbers.
Okay. What was that like?
Q1 numbers, and Q1 to Q1 from 2024 to 2025, the growth was about 6%, I believe.
Okay. And what was that? The total
It
revenue?
was just the quarterly revenue was. I have to look up the numbers, but about $2 million.
About $2 million. Okay, that makes sense. All right. And then when do you report the Q2 number?
Soon. I think when we...
You're going to wait for the Fuse ticker first?
Yeah, when the ticker changes, we have to file the Super 8K. I think that's where the...
I think that makes sense. If I'm allowed to advise, if you're allowed to wait that long, I think it makes sense because, not just realistically speaking, you're not going to get a ton of traction with the stock until you're uplisted. But, I'm happy we're having this conversation now because there could be a lot of opportunity there for those rights that you were talking about, the CSLRF. That definitely sounds interesting. But so basically we're talking about in a couple of weeks, we're going to go to Fuse. We're going to get your Q2 numbers. That's going to be great. And then I'm not forecasting it's going to be great. It's great that you're going to report that. All right. And then, I wanted to ask you this. Yes. How much revenue do you need to get to break even?
About additional 2 million to 3 million a year.
You only need to grow just enough, like at $12 million annual revenue, you'll be a break even.
So if we are just looking at the operational, without talking about any numbers that's not disclosed on the financials, I would say from a overall operational expense side, we are. I would say a little more, I guess 4 or 5 million, depending on if you look at EBITDA versus adjusted EBITDA.
Okay. I guess what I'm asking, Charlie.
Ben, Smear's being a little bit conservative on this, but he has burned very little money. He's been burning $2.5 million a year, plus or minus $3 million a year in real operational expenses.
So
that's it.
Okay, I mean that's pretty impressive. Is that the same number you're talking about? Maybe another 3 or 4 million in terms of cash flow. What I'm getting at, and Charlie, you can appreciate this. And look, we've had some very successful engagements with a couple companies with microcaps looking to get their story out there. And the key to getting people interested in a microcap is having visibility in when you don't need to hit capital markets, especially on bad terms, right? That's what kills microcaps. It's like you got to go raise money. Okay, fine. But then they raise money at like a huge discount with warrants, and that like kills the capital structure. Like, so that's what we want to understand. Maybe I'm going to let Charlie speak to this part a little bit instead of Samir. But like, how's that look for someone getting into the stock, looking at this here? What's the outlook for like the timeline on when we can get? Because here's the point, Charlie. If a microcap is in a position where you can say, look, I'm basically cash flow break even, right? And if you want to now hit capital markets for growth, you can get much better deals, and you don't have to get these warrants. You don't have to get these toxic financing and death spiral warrants because you're profitable, or you're cash flow profitable, or cash flow break even, or you're very close to it, right? So that's what I'm trying to get to. It looks like you might have that there. I don't want to, but based on what you're saying, just a few more million revenue. But Charlie, can you speak to that a little bit?
Yeah. So look, I think the capital structure of this is looks pretty good compared to a lot of SPACs coming out of the gate. He's burning very little. He's going to have enough money to get through 12 to 18 months without having to refinance himself. He's got an FPA in place for another 3 million shares of placement into the market if that's indeed what he wants to do. The price is currently set at $12 a share. There's no ratchet effects. It's one of the cleanest FPAs you'll ever look at. So I think and that's going to allow him to tap the capital markets when and if he needs it for any sort of inorganic or additional organic investment in sales or marketing or anything else, without having to pay an underwriter, without having to go borrow money at stupid convertible note rates. The one thing that we want as really long-term investors that are going to be holding this for the next 5 to 7 years in our funds is we want the same things that any other investor wants. We are fully aligned. And we don't want those toxic instruments in place either. I mean, that just kills the performance of our vehicles. So, we're talking the same language, man.
Yeah. Okay. Great. Do you have like a personal stake in the company or any incentives? What kind of incentives do you have?
Through the transaction, not only are our funds invested, but I'm personally invested in the sponsor equity that's going into this vehicle.
Okay, great. And Samir, are you comfortable telling us, or maybe it's public, probably is, I don't know, like what percent of the common shares you're going to be owning here after the deal's closed?
Yeah, I think it's in the disclosures as well. I'll have about 6.5 million shares or so.
Okay, 6.5 million out of what was it again? 26 million. Cool. All right, and I got that. So we got a few minutes left, and in the last few minutes, I want you to talk about the future and basically, the most important thing is like inflection catalysts. Like, are there any big moments in the next few quarters, any kind of deal you're trying to get closed or whatever, where it's like, oh, this is going to propel us to the next level or is going to propel us to profitability? Is there anything like that might happen over the next few quarters, and what might that be?
Well, that's one. If I can just jump in briefly, and I'll let Samir opine on this as well. But I think that's one of the ones that we can talk about elliptically. We can't say stuff that hasn't been put out into the public domain yet. But I think there are opportunities to look at to grow both organically and inorganically in the next year without any sort of issue. I think there are a number of things that Samir is working on, but until they are ripe enough to put out on an 8K, we've got to be a little bit cautious about what we say and don't say.
Mm-hmm. Do you need such a catalyst to get to profitability, or are you just going to get there through the organic growth that you're experiencing now? Samir.
Oh, we can definitely get to profitability with organic growth.
Okay, and can you give us a little glimpse into what sort of timeline, based on your growth rate? Give us a little guidance on direction on when that might happen. Is that something that can happen? Because you're not too far. You're just talking. You already grew 16%, 2023 to 2024. You need another few million. Is it possible you can get to profitability sometime towards the end of 2026?
So as I said, the growth rate would change as we get the funding, right? Because we haven't had money to spend on sales and marketing at all. We have a very small sales and marketing team, so I'd be able to provide better prediction on the growth rate that turns into when we can get profitability once we have the funding and once the money is in and so forth.
Okay. But even before that, it sounds like you're growing organically anyway, even without that additional money.
We are.
Okay.
We are.
Because if you do that math, like 15% a year, if that continues from 23 to 24, even without the marketing boost, it's not far off in the field. It's not like something 5 years away. Like you're on pace to get towards profitability in the foreseeable future, it looks like.
Yeah, so if I can jump in, Ben. So I think you end up with a situation where where he'll get to profitability in a steady state environment without any additional marginal funding. But if he wants to change his growth rate from 18% to 45%,
Got it.
he's going to invest in sales and marketing and that'll create a boost in growth, but also a boost in spending. So you end up with this catch-up period that may be in place, and it depends on how profitable and what the lag time is on converting new business.
Okay, listen, we're running a little bit late. We're right at the close. I do have to ask one more question. If you can summarize as quickly as you can, Samir. We all love the AI space. We see you do AI, but a regular person who's not an AI expert can understand, what end application do you facilitate? Like, how do you make a difference in my life, your product? Ultimately, what are you facilitating here to happen for the end user?
So our customers are B2B customers who may sell to other businesses or to their end users who may be direct consumers. And some examples of the AI engines we have is, for example, fraud detection for travel retail, right? Where it's looking at coupon fraud, tip fraud, very specific fraud related to travel retail. Or it could be another engine, which is information extraction from lease agreements, where it is extracting information extraction with high accuracy to create rent rolls for the businesses. That will have a downstream effect for the end consumers of those businesses. But we are primarily in a business of helping enterprises, fairly large enterprises, to implement AI with our AI Studio and services.
Okay. You familiar with a company, publicly traded company called Intellich? Have you heard of them?
Intellich, I am not familiar.
They do something with fraud detection. They do something with fraud detection for banks and social media. I don't know, like verifying identities. I don't know, and they use AI for that.
Okay.
Anyway,
okay.
So I'm not an expert in this stuff. We'll have to do more research on exactly what you guys do. But my takeaway from this is I want to reiterate the ticker symbols and everything. So it's CSLMF. In fact, if you don't mind, before you guys leave, I'm gonna share my screen here. So we have CSLMF is the common shares. In 2 weeks, roughly, when NASDAQ approves it, it's going to switch to FUSE.
Yes.
The ask is terrible here. It's $260 by $6. So you can't really trade this, but you have a liquid way of getting into this stock. It's CSLRF, which is 23 cents by 27 cents, which is the rights to get one share. Are these exercisable immediately, Charlie, if you own the rights?
They're automatically convertible at the time of the closing on NASDAQ.
Oh, beautiful. All right. So then, that's easy to calculate. Let's say CSLMF trades at $5. Then these should trade at 50 cents, right? It's a 10-to-1 conversion. So looks to me personally, look, I'm not recommending what people should buy or sell. But if you're interested in this story, if you like what you heard over here, I do recommend the way to do it is going to be the rights, CSLRF. And there might be an opportunity. We'll talk more about it in our story trading community as we get closer to the conversion to the ticker symbol FUSE. But there might be a re-rating of the stock a little bit. That tends to happen when you go from OTC to NASDAQ. You tend to get some good spikes in the stock. So if that happens, then you can see a nice return on this CSLRF. I'm not recommending that. You got to make your own decision whether you want to do that or not. All right. And with that, any final words, anything important that I missed that either of you want to touch on?
No, I don't think. I think the only thing that you should think about when you're looking at the rights is you shouldn't be looking at Fusemachines as a PE on its trailing numbers. You should be looking at it as something on a projection on its forward-looking numbers.
Got it. All right. Makes sense. Thank you, Charlie, so much. Thank you, Samir.
Thanks, Ben.
We'll talk to you next time. By the way, I think we have something. I think you're on Wolf Financial next Tuesday. Is that right?
That's right.
That's right. So we're going to have a conversation with Wolf Financial Tuesday, I believe at 1:30 p.m. So if you want to hear more, that's going to be more of a panel discussion with other folks. It'll be fun. Nice format. So we'll talk to you then Tuesday at 1:30 p.m. Thank you, everyone.
Excellent.
Yep.
Thanks indeed.